Hello and welcome to the trade. Well, before we get into the charts to watch, let's take a look at what traders are watching. Well, Donald Trump's saying sweeping tariffs that he's imposed on Mexico, Canada and China may cause some pain for Americans, as Wall Street and the largest US trading partners signal hope that the trade war will not last long. Global markets buckling up for a turbulent session as is playing out today locally. The Mexican peso has tumbled more than 2% to the dollar in low volume after the US announced that 25% tariff. And against the US dollar, Canadian is off 1.5%. Gold prices pushed above 2,800 US dollars for the first time, fueled by a rush to safety following those announcements. Well, let's now take a look at the technicals. Gary Glover joining us from Novus Capital. Gary, welcome back. Good to catch up with you. Of course, market's moving pretty quickly in response to what we've heard from Donald Trump. Let's start in the States then. Of course, these announcements were made over the weekend. What are you seeing with the S&P at the moment? Clearly with the potential to fall substantially. I'm just looking at the futures are off by about 2%.
Yeah, it's funny actually, all the major indices have actually squared out ranges there from the previous pullback there. So if you look at that 22 high back to the 22 low there, there's quite a reasonable sort of range in the market. I think the Dow's basically squared out at 45,000, 100% squaring. The S&P is now squared out. Those sort of squaring ranges there, just in the past when we've seen those indices square out, we've often seen that be like a ceiling technically for the stock or for the indice for at least 6 months. Sometimes it can last 12 months and potentially 2 years. So on this S&P 500, if we can't see on this chart here, but if we went out and looked at the 0709 bear market, we squared that range out there. The 2015 high was a squaring of that range. I think the 2018 high was 150% squaring. The 2020 high was the 200% squaring. The 2022 high was the 350% squaring, and now the 6123 is a 500% squaring of the range. These squaring of the ranges, I know it's a bit of a Gantt sort of theory around the charts there, but these major squarings of ranges there, they just act as resistance. It's sort of like it's like an old low. These squarings there, they sort of like markets can only sort of move in increments. So we've just hit a really important squaring here on the S&P 500, on the Dow and the Nasdaq as well, all sort of pretty simultaneously, all pretty close. So just tells us there technically that we've hit big levels, big resistance points, and in the past, markets they've taken at least 6 months to actually break those levels. So normally you would see some sort of consolidation and pullback here. So if you look at the post-election year cycle, which we're in, and also if you look at all fifth years, typically the first quarter of those sort of cycles are a little bit negative, and they can have what they call these broadening patterns, and you often find a low around March. So the squaring of the ranges, the cycles, the post-election cycle, they're just telling us here we might get a little bit of a choppy sort of first quarter and a little bit of weakness into March. The good news is we don't often see big corrections in those fifth years and also in the post-election years. So I don't think we're going to see any big sell-offs there. But if you look at that squaring of the range here, I think around about 41,000 on the Dow would be, come back to the 150. Considering we've already squared out 200%, to come back half of that range would make a lot of sense. So just seeing all these indices all at the same time here, all squared out at really important. So yeah, just the charts are telling us here that there's a ceiling on the US market and that it can't go forward here for at least another 6 months. So we're just going to see probably a period of consolidation or pullback. But the good news is we don't see typically big pullbacks in these sort of cycles. So it's going to be choppy. Yeah.
So how's that looking then locally? Are we seeing similar moves, Gary?
Yeah, our market did expand to a slight new high there last week, which was sort of encouraging. We do have, the thing about these inflationary periods, Andrew, if we do, obviously like the big risk here with sort of trade wars is that we're going to see a spike in prices. If everyone's hiking up tariffs and putting pressure on prices, and we're moving prices higher for a lot of goods, and like half of the US's food, vegetable, nuts is coming out of Mexico. So if they're suddenly 10 or 20% higher, then you've got a risk to inflation, and that's why the market's concerned here, because inflationary periods of the past have actually been pretty good for metals. So we've seen, like in the 70s there, I think precious metals like gold and silver was pretty buoyant, energy very buoyant, just commodities in general pretty buoyant. So if the cost of everything's going to go up here, then those commodities are generally going to be elevated there. So it's interesting. The soft and hard commodities is sort of where we get there, but we just haven't. Typically, the soft, you don't see the big gains in the soft commodity stocks. You sort of see them in the hard commodity stocks. So the kind of the metals is really the place to be looking here.
All right. Mindful of that then. Well, let's get into some specific stocks then. Gary, you're actually a bit pressed for time, so I'll get cracking with Megaport. Has been under a lot of pressure, certainly over the past 12 months. Are you seeing an uptick now?
Yeah, look, it did make a false break here. So we've seen with markets there recently, because we're in pretty choppy markets here, we're often seeing sort of range breaks. So we'll go to a slight new low and then reverse there. And sometimes these false breaks can be places where we've seen reversals in the past, and we've seen quite a lot actually in the last few years. So we've seen a nice bounce, gone back to the last high, just in a bit of a consolidation here. So I think if this can consolidate here and tighten up there, this is one to watch here in the coming weeks there. Sort of is showing a bit of relative strength the last few weeks versus the market that's a little choppy here. Even today it's holding up quite well. So definitely one to be watching there for like a constructive sort of setup here.
Let's take a look at Kelsian, the transport operator. Once again, difficult past 12 months.
Yeah, pretty negative. Sort of almost a halving in price there just in the last 12 to 15 months. I think we're down to around about 11, 12 PE. I think about 10.5 if you look at 26 forecast earnings. So a bit of value there, a bit of yield there now. Has gone, again, just gone to a new low and didn't sort of carry through. So started to see a little bit of volume coming in. So this has got signs of maybe some sort of construction there. So I don't have a position in this, just sort of watching this closely here, just sort of showing a little bit of strength at the right time here. So just sometimes you can get these fast moves out of these false breaks. So we see some more positivity. This could be one to keep an eye on.
And finally, Domain, the digital property portal. What are you seeing here?
Yeah, big expansion in the rain again. So we expanded to sort of a slight new low in that 23. We've expanded to a slight new high in end of 23, and now end of 24 we've actually expanded again to a new low. So while REA has been going pretty much up for 2 years, Domain's been sort of going down here for the last 15 months here. So although they're both expensive, relatively they're probably less than half multiple here on Domain, but just started to see a little bit of an uptick after a false break. Again, haven't seen the volume come in, Andrew, so you want to see a little bit more volume come in to sort of show signs of accumulation. I just want to see price congest here and maybe break to a new high there. So I think it's around 276 is the current high. So I probably want to see this sort of hold here and then eventually maybe break through that level there before I look at it. But just the early signs here, we might get it, we can get these sort of change in trends and change in character after we get these sort of false breaks or to a new low. So it's just one to keep an eye on here. We can show some relative strength there versus the market being weak. Could be worth looking at here in the next week or two.
The key levels to watch. Gary, thanks for talking us through the technicals.
Thanks, Andrew.
And that is The Trade. Join us again tomorrow.